Our top story tonight, the bears slacken their hold going into the weekend. Indices end the week flat as the Sensex gains 500 points over the course of the day. The Nifty jumps 130 points. The rupee climbs off the 20-month lows hit yesterday. FMCG giant HUL ends FY15 on a strong note, helped by improving consumer sentiment and healthy volume growth. Revenues come in at a better than expected 8%, but a higher tax rate caps profit growth at 16%. Problems with deteriorating asset quality continue to plague Punjab National Bank. The fourth quarter of FY15 sees the bank's provisioning hit a record high of 3,800 crore rupees. Gross and net NPAs also shoot up.
Do not try to get into micromanaged regulation. You will die.
5 days before his term ends, TRAI Chairman Rahul Kullar cautions policymakers against micromanagement of net neutrality issues, suggests the government must decide on broad principles of the policy to protect consumer interests and investments into the telecom sector. Another rocky day in Parliament. The government holds back tabling of the land acquisition bill and braces itself for a crucial week ahead as it gears up to table the GST bill in the Rajya Sabha on Monday. Sahara Subrata Roy may walk out of Tihar jail next week. The company says it will complete paying the entire bail amount of 10,000 crore rupees over the next few days. Procedural delays and red tapeism continue to ail India. That's the message from global CEO of Honeywell, a $40 billion enterprise. David Coty tells CNBC TV 18 the government has a very small window to get things right. Also on the hour, German automaker BMW ramps up its capacity in India in a bid to take on competition from Mercedes and Audi. Well, the poll pundits could not have got it more wrong. In what was supposed to be a hung mandate, it's just turned it on its head. The voters in United Kingdom have ensured that David Cameron gets to stay at 10 Downing Street for another 5 years at least. The Conservatives have managed to secure 330 seats out of the total 650. That is 4 more than needed for a Commons majority and makes this first such victory since 1992. And while Cameron is definitely ecstatic, his rival Ed Miliband has already gone ahead and submitted his resignation. Good evening. Thanks very much for joining us on India Business Hour. Well, the elections in the UK, one of our top stories, but here's a look at the other big stories we're tracking for you this evening. Let's start with the market action, because after gripping the markets in a bear hug for 3 days straight, the bears today slackening their hold ahead of the weekend. This helped the key indices end in the green on the last trading day of the week. The Nifty gained about 130 points, ending above 8,160, and the Sensex today managed to reclaim the 27,000 mark with a 500-point surge that we saw coming in for the Sensex. Now, the bank index and the mid-cap index, remember, both were beaten out of shape over the last couple of trading sessions. Today, seeing a rebound as well. And today's surge has also helped the indices end the week flat. So overall, the Sensex has closed 0.35% higher for the week, while the Nifty has gained about 0.12%. So today's rally has actually erased a lot of the losses that we saw over the week. But that does not take away from the fact that after delivering 30% returns in 2014, the Nifty has fallen close to 3% to date in 2015. Now, in contrast, other emerging markets have delivered healthy returns. Brazil is up 17%, so is Russia, and despite seeing its worst week in 5 years, China is still up 23%. So unlikely that we're going to see a repeat of 2014, and at this point in time, India is underperforming its other emerging market peers. Well, this is some experts turning a little cautious. Andrew Holland of Ambit says the market will continue to remain volatile because of oil prices moving up and other global factors, but Mark Matthews of Bank Julius Baer & Co. remains optimistic about the India growth story.
We think the market's going to head straight back up to 8,500 on Nifty very quickly. Because, you know, I think all the negatives were played in. Oil price looks as though it's coming lower, and really we've kind of reflected what's been going on outside of India as well as inside India in the last couple of months. But don't get me wrong, it's still going to remain volatile over the next few months. But 8,500, I think, is the next stop for the index.
If you buy something like India, in my opinion at least, and my counsel to investors around the world, this isn't a trade, this is an investment. This is about a very large country that's going to have a lot of growth over the next 5-10 years. Don't try to chop around on a month-by-month basis. So we recognize that India is going through a soft patch, but we have not decreased our own allocation to India, and we have not told our clients to sell India because it should be a long-term investment.
Well, India is not a trade, it's a long-term investment story. That's the view coming in from some of the market experts that we've been speaking to. Meanwhile, the currency today also made a comeback, with the rupee gaining against the dollar as intense dollar selling by banks led to a recovery from the 20-month lows that we'd seen for the currency yesterday, but gains being capped due to traders refraining from taking fresh positions before the latest US payrolls data, which is out later today. So that's the rupee for you. 63.94 is where it closed for the day. But let's talk about the big earnings today, and there was plenty of them. Let's start with FMCG giant Hindustan Unilever. It's had a steady Q4. Improving consumer sentiment and healthy volume growth have helped revenues grow better than expected, 8%. Net profit, however, registered only a 16% growth. This parameter was subdued because of a lower other income component as well as a higher tax rate. Here's a wrap of the HUL numbers.
HUL has ended the financial year 2015 on a sound note, and indications are that the worst is behind it. Helped by benign input costs, the company's gross margins have expanded to 70 basis points over the quarter. This provided it with the cushion it needed to reduce prices in select categories, resulting in a 6% growth in volumes. This is being seen as a good news, considering HUL has been reporting 4 to 6% volume growth for the past 3-4 quarters. But whether the company will continue to have headroom to cut prices to drive volumes is up in the air.
To take some corrections in the price so that we create better price value equation for the consumers, which we have done. Yeah, we are also seeing some of the commodity prices beginning to firm up. We are also seeing rupee starting to move towards the 64 to a dollar mark. So it's too early to say what is going to be the situation on the pricing front.
Surprisingly, it is the company's mainstay segment, soap and detergent, that has struggled to keep up with the other segments. Personal products saw revenues grow 13%, revenues from beverages grew 12%, and revenues from packaged foods jumped 13%. In a sharp contrast, the soap and detergent segment revenues grew at just 5%. This points to a pickup in urban consumption. However, there is some worry that the unseasonal rainfall may pose a risk to rural growth. Nevertheless, HUL, which has a higher exposure to this market than its peers, says it's too soon to say just how that story will unfold.
Seen some green shoots, in some places too early to say whether a trend has been established. I think we'll have to wait for some more time to see how the markets really pan out, both in urban and rural.
But the company says it will increase its spending on advertising to try and not only overcome any slowdown, but also to offset stiff competition. In the fourth quarter of FY15 itself, ad spends as a percentage of sales inched up by 150 basis points to 13.6%. Brand building also remains a key focus area for the company. HUL's cash in hand has hit a record 5,000 crore rupees, and a sizable portion of this will go towards product innovation. But while the markets cheer the fact that HUL has not seen any incremental worsening in growth, external risks are aplenty. And FY16 may not be the cakewalk most hope it will be. In Mumbai with Pragya Bharadwaj and Priya Shet, Ritu Singh.
So good quarter there for HUL, but the worry really is on what is going to happen as far as rural consumption is concerned, especially if we have another below par monsoon. And I've been speaking with a whole host of people, FMCG companies, consumer durable companies, and that is their #1 concern today. But Royal Enfield fans have once again given Eicher Motors reason to cheer. The company's first quarter net profit up 40% to 195 crore rupees. Total income coming in at 2568 crores. Operating margins also at 14.3%. That's higher than the 11.5% a year ago. The stock reacting positively to those numbers, higher by about 7%. Those are the good numbers. Here's the bad story. 3 state-run banks reported their numbers today, and the biggest disappointment from the pack from the earnings season so far was Punjab National Bank. PNB has reported a 62% drop in profits in Q4 and a 15% rise in bad loans. Indian Overseas Bank has reported a mild turnaround compared to the net loss posted during the December quarter, whereas Allahabad Bank has matched street expectations with bad loans remaining high but stable. CNBC TV 18's Ritu Singh is here with a roundup of the hits and misses.
Punjab National Bank, the second largest state-owned lender, reported a 62% drop in fourth quarter profits, and that's putting it mildly. The bank actually reported a pre-tax loss of 631 crore rupees versus a pre-tax profit of 1,034 crore rupees last year. A tax inflow of 938 crores helped the bank post a measly profit of 306 crores. Profits fell on the back of provisions of 3,834 crores, up 80% over last year and 161% over the last quarter. Net interest income saw a dip of 5.2% and gross NPAs rose to 6.55% in the March quarter from 5.25% of total loans in the corresponding period last year. In Q4 alone, PNB reported fresh slippages of 7,424 crores and it also restructured a whopping 7,880 crores in Q4. The management, however, is putting up a brave front.
So much of stress we have been taking, and we have now, we ended up at 5.97%, which increased to 6.55 this time. It is not going to worsen. We are going to recover like anything, and no fresh slippages now. So far as big accounts, we have been seeing some stress, which we couldn't do this time. Just 2 or 3 accounts maybe they are in the pipeline. Otherwise, there are no such accounts which are going to go further.
In contrast, Allahabad Bank's numbers showed more stability. Its net profit rose 29%, while net interest income grew by 7.7%. Provisions fell by 1.3% over last year at 631 crore rupees, and gross NPAs came down to 5.46%. Indian Overseas Bank reported a drop of almost 87% in profits over last year, but even this was an improvement over the net loss posted in the previous quarter. Its net interest income also slipped 11% over last year, but provisions reduced by 18% on a yearly basis. Asset quality didn't worsen, but is already perilously high at 8.3%. All told, little to cheer in the PSU Bank numbers today. In Mumbai, Ritu Singh.
All right, so PNB is the big headline there coming in on the earnings calendar. Disappointing numbers across every single parameter for the bank. Well, let's talk about Parliament. It's been a tough day for the government, with the Lok Sabha adamant and the opposition adamant that they're not going to allow the government to bulldoze its way on the land acquisition bill. The land acquisition bill was slated for discussion today, but the government decided to withdraw that from the agenda for the day. Of course, the Congress also expressing its displeasure about the government's decision to extend the session unilaterally by 3 days. But this week is done. What is crucial is the next week, because crucial bills are slated for consideration and passage. The big one, the Constitutional Amendment Bill for the Goods and Services Tax, that will be tabled in the Rajya Sabha on Monday, and that is where the government will need to get its floor test going. It has to get its numbers right in order for it to be able to pass that. It's also going to try and table the land acquisition bill in the Lok Sabha, as well as the black money bill. The black money bill, of course, our sources tell us should perhaps go through. In what is definitely going to put the BJP government in a spot of bother is the fact that its oldest ally, the Shiv Sena, also seems to be wary of siding with the government on the land acquisition bill. CNBC TV 18's Rituparna Bhuyan caught up with KV Thomas of the Congress and Shiv Sena MP Anil Desai to find out what strategy they would adopt on the land bill as well as the GST.
Stand is well clear. This has to be discussed, deliberated, and it cannot be thrust on the farmers. This is our stand.
Discuss and debate it within the Lok Sabha or outside Lok Sabha?
Both sides. Both has to be done. Both has, because this is an issue connected to the farmers.
So you are willing to discuss it in Lok Sabha, and which means that?
No, but I'm as a personal capacity, but as a party. This has to be deliberated both outside and inside, right, and understand the view of the farmers.
We have expressed explicitly what our things are, or what our requirements are. How do we see the bill, or how do we gauge the bill? And if lot many things have come by way of introducing amendments into it. A few things I think left here and there. once the bill is tabled, I mean, we'll be able to know what are the things, what are the amendments which have been taken into account, and if anything is left from our side, I mean, then discussion is always there on the table. I mean, we will be having parleys of meetings and all. And as the party line comes from Shiv Sena party president, I mean, things will be decided.
But in the current
things will go smoothly.
Yeah, in the current format, you are not satisfied. Can we say that?
Current format, I mean, you've seen, I mean, all along the proceedings of the House, how it went, how we presented ourselves, and lot many things are coming. I mean, we should see, I mean, how favorable the things come. I mean, it's not a favor that we are asking for. We are asking for the favor for the farmer.
So the Shiv Sena still undecided on the position it will take as far as the land acquisition bill is concerned. Watch out for Parliament action next week. But here's the latest as far as the MAT issue goes. The AP Shah panel set up by the government to assess the merit of imposing MAT on FIIs is unlikely to have a government nominee on board. Instead, the three-member panel headed by Justice Shah will have two tax experts who will dwell if the taxman is right in levying MAT on FIIs. Sources also tell us that the government could mandate the Shah Commission to give its advice on tax disputes that may arise in the future. It's also likely to seek policy inputs on direct tax laws from the panel, and hence this body could continue to advise the government in the long run, not just on the specific MAT issue. As a first step, the Shah panel will report to the government with its recommendations on the MAT issue at the earliest. We don't, of course, have a timeline, but the government clearly seems to be sticking to a conciliatory note on the MAT issue. A day after the finance minister announced that a new panel under Justice Shah would look into the interpretation of all direct taxes, the CBDT chairperson Anita Kapoor has said that the government will not take any coercive action on various MAT issues. Notices that have been issued to FIIs. Remember, some of these FIIs have already moved court against those notices. Well, speaking of court action, Sahara Group has agreed to pay the entire bail amount of 10,000 crore rupees towards securing Subroto Roy's release. The company has already paid over 3,000 crore rupees in cash, and it says it will pay the balance of the cash component and provide a bank guarantee of 5,000 crore rupees by next week. Ashmit Kumar, who joins us now with the details. Ashmit, you know, Subroto Roy has been in Tihar for about 14 months. Is it likely, on the back of the assurances made to the court today, that we could see the payment come in next week and Subroto Roy walking out of Tihar?
Well, indeed, and in fact, today as a part of the proceedings, we also saw the SEBI Council conceding that perhaps if these payments are affected, we could see Subroto Roy walking out of Tihar jail. We'll come to that in just a bit, but as you had pointed out, 14 months is the long wait that Subroto Roy has been waiting for, again in Tihar jail. Finally, light at the end of the tunnel. Over these last 14 months, we've seen a lot of back and forth, proposals being brought forth, proposals being rejected, deals being cracked, deals falling apart, speculation over their prized possessions, their 3 overseas hotels, but finally some clarity. Couple Sibal appearing for the Parivar, going on record and saying that they will bring forth bank guarantees of 5,000 crores as well as cash of 2,000 crore rupees, having already paid a little north of 3,000 crore rupees to the market regulator, and all these payments bringing the Sahara Parivar close to that magical number of 10,000 crore rupees, the bail as prescribed by the Apex Court. Today, Kapil Sibal today clarified that they will be bringing forth an unconditional guarantee from a scheduled bank in favor of the market regulator, and they will also be looking to close the cash component over the next few days. And this is what led the SEBI Council to concede that if these payments are affected, Subroto Roy could well walk out of Tihar jail. But of course, this development is likely to bring cheer as far as the Parivar is concerned. But there is also the bigger worry here, with the Apex Court now shifting its focus to the balance amount that SEBI claims is recoverable from the Parivar. SEBI throughout has been insisting that they believe that 24,000 crore rupees plus 15% interest to be calculated from 2012, that's the date of the order, is the amount recoverable. Back of the envelope calculation suggests that this interest could add up. The grand total could come to a little north of 35,000 crores. So that's the kind of figure that the Parivar could be looking at, but that's for a later date. For now, Sahara has agreed to pay, and we could see Subroto Roy walking out perhaps over the next few days. More action on the 14th. That's when the court takes up this case for further hearing. All
right, so maybe on the 14th we could see Subrata Roy being given a final hearing from the court on whether he can exit Tihar jail after 14 months or not. Ashmit, appreciate you joining us with those details. Now, the chairman and CEO of Honeywell, the global conglomerate with sales of over $40 billion in 2014, the man who heads Honeywell also heads the US-India CEO Forum, feels the government needs to step up the gas on reforms. In an exclusive conversation with me, Kote says that the government bureaucracy has a negative impact on India's GDP, but asserted that things are getting better. Listen into a slice of that exclusive conversation. You're here in India, you've met with the Prime Minister, but let me take you back to an interview that you did in 2012. You said, as bureaucratic as I may feel the US and other countries are, it's like India took the complexity of the British system, doubled it, added 10 times the people. It's mind-boggling, and I'm amazed how long it takes to get anything done. I have no math to support this, but I've always felt that the government bureaucracy costs India about 3 GDP points a year. But you also said that you're a big fan of the country. Have things changed significantly since 2012 for you?
I would say all those things that I said then are still true, except that now it's changing for the better.
Okay.
So I at least back then, because I was getting ready to say the exact same thing again. If you hadn't quoted me, I was going to say it again.
So it continues to be as bad, isn't it?
Oh, yeah, it's still an issue. The thing is, at least now, government is doing something about it. And that makes a huge difference, because as things start to get better, then business starts to get better, which causes more change to happen, which causes business to get better. And back 3 or 4 years ago, it was just stultifying. In fact, what you were feeling in that interview was just total dismay on my part for a country I believed in and felt had wonderful potential, and it just couldn't get out of its own way. And now I feel like that change is happening, so I'm actually quite enthused about where things are going. And I just hope everybody is supportive of the government in making these changes, making it easier to get business done, getting things like GST finished, just ease of doing business everywhere, extraordinarily important for the growth of the country.
Well, that's the global chief of Honeywell talking about doing business in India. Remember, India contributes about 2% to Honeywell's global sales in comparison to 6%, which is the contribution that China makes. Kote continues to be more bullish on China in comparison to India, and he says that's because of China's track record in getting things done. But the big global story tonight, David Cameron has returned to 10 Downing Street after the Conservative Party defied polls to win the general election. Cameron has promised to lead a government for one nation and make Great Britain greater. The Conservatives have 330 seats out of a total of 650. That is 4 more than needed for a Commons majority, and makes this their first such victory since 1992. Cameron's rivals Ed Miliband, Nick Clegg and Nigel Farage have all resigned after election disappointment. The Conservative leader is now beginning the process of putting together the new government, with senior cabinet appointments expected to be announced later today.
The pollsters were wrong in their projections, the pundits were wrong in their predictions. We will have a clear government in place in Britain, a Tory-led government that should be in place for the next 5 years, free to implement its policies as its leaders are now saying. Labour really has lost out. They lost out primarily because they had an unconvincing leader. He never did make that connection with voters that the party needed so badly. There's a dedicated core of Tory supporters, a dedicated core of Labour supporters. It's the in-between people that have to be won over, and clearly Cameron won them over. So a stable government can be in place now, no coalition as predicted.
Sanjay Suri, appreciate you joining us. The polls got it wrong, and the European shares rallying today on the back of that electoral result led by the FTSE, which is higher by almost 2% the last I checked, on account of that decisive vote that we saw. 2.3% higher, 2.65% higher for the DAX, and the CAC has also gained about 2.5%. Shifting focus now to the US, there seems to be employment share across the Atlantic. The US Labor Department's job report shows that for the month of April, the economy created 223,000 jobs during that month. That's slightly below estimates, but a rebound from the meager 85,000 jobs created in March. The increase in jobs and more people entering the labor force has tucked the unemployment rate down to 5.4%. From 5.5%, making that the lowest level seen since May 2008. Quick check of the U.S. markets also looking very, very strong today. The Dow, the Nasdaq and the S&P 500 all gaining ground about 2%, 1.5%. Crude prices edging lower after the latest jobs report showed that the U.S. has added jobs, so Brent is now trading at $65 per barrel. WTI NYMEX is at 60, so that's Brent at 65 and NYMEX now at 59. Crude futures all set to post its first weekly decline in a month.